Get going. First day of the week, first day of the month, first day of the quarter, July 1st. Some interesting things today, let alone this week. It's going to get interrupted by the 4th of July, but Friday is worth coming back because the unemployment report is scheduled to be released on this Friday at 7:30 Central. So here in the trading room, we had a gap open higher today in the S&Ps, all due to the tailwinds we had over the weekend with all the optimism from the President Trump, President Xi meeting. Then North Korea, everybody was getting along and hugging and shaking hands, and we're going to have a deal, and we open up. We closed, first of all, on Friday really strong, and then we open up 25 points better than that in the ES. So Mark came out early, talked a little bit about value area high and low and where it was in the overnight session, and I took note of 78. To me, 78 was pivotal. If we open up above it and they keep using it as support, it's bullish. But the second time, you could trap a lot of profilers long, and just stay with me on this one. So if you trap them long, they start moving through it. You've got a lot of sellers that could extend the downside. What happens in profile is, here, let me clear this and draw it again. This is important kind of understanding here. At 8:30, we open up, I don't know, right around here, okay? We rally, and then the profilers are going to look to buy 78 even, but they're not going to do it here. They're going to wait to see it work. After they see it work, then they're going to do it, the second or third test. They'll never do it on the first one. They want to see it work, right? They want confidence. And I don't mean guys like Mark or guys like that are really efficient at qualifying profile levels. I'm talking about people who just read it from the book, who just generally look for profile for a level and think that's going to be the holy grail. Profile is great for understanding the auction market process, and I'm a big fan of it, but you got to use it when the rest of them are using it and they're wrong. So in this case, we had that scenario. 78 was important, and it worked once right in there. When I say work, came into it, came out of it, and rallied. Now, the second time, a couple things were happening that it was going to test it and maybe had a probability of going through it and getting weak. Number one, we had the fundamentals that I think drove the market too high too fast, became what's called stupid news that a couple of my prop friends have talked about in our program, and got the market expensive. It was maybe too high, but we wait for the market to tell us that's the case. So you see a long up bar, down bar pattern that came in this particular sequence to start to scratch your head that maybe it's weakening up. But you get a really good tell from the Russell that someone in the room mentioned. It was Dave. Hey, the Russell's getting weak, and it's getting weak before these other ones. So you get an ancillary stock index to get weak, and you get a sequence transitional moment, long up, down bar, right? And then you get a lot of suckers playing 78s for a long, and that's going to be the propellant to push us lower. So let's play this and pay attention to the right side of the screen and let it go. Now, that yellow line I mark as the open, 79.25, all right? But 78 at this time was the overnight value area high, as Mark pointed out, and said that these guys will try to defend it, and if they don't, they fail. That's when, to me, the true opportunity is for profiling, is you got to take it the next step. You got to let where a popular profile entry doesn't work. And you get, if you could put some sound to it, you get people yelling and screaming and swearing or just not knowing what to do, and they're like deer in headlights, and they just take all kinds of heat, because that's what's mostly going to happen to retail traders. Now here, as I'm talking, it went kind of fast. On the way down this bar, we got fast in here. There's no coincidence that this market came to that red line, stopped, and went down the other way. Now, I don't lay an offer in the book to get short, but it didn't just go up here, play around, and go down. It went here quick and then came down, and it spiked in to that area, and I took a shot. Now, I don't get 80 halves necessarily. They got 80 or 79 3/4, But I know where I'm wrong, and it's above here. And I know it spiked and got expensive real quick, but I'm playing this long up the bar, down bar, into resistance. It spikes, it goes bid, bid, bid real quick. Take a shot. If I'm right, I think I'll be told pretty quickly. And then if they can get through 78, then it becomes put your feet up and ride it down. I don't do that technically. I'm just trying to paint the picture. Gets through this green edge zone like we talk about so much in these videos that you could kind of see over and over again, but in the room, see it real time. And then through 78, you don't have to see people buying it. You could assume there are a lot of people getting long that's seen it work this time. All right, they got proof. They got all the confirmation they need. Now they're wearing it. So you get a lot of people stuck long in this area. And what I talk about, and I'll do it with some fancy colors, if indeed you get people long in this area, what happens after you buy it? You're a what? Seller. So then that area becomes subsequent resistance. Why? Because people who are long that got it shoved down their throat turn to sellers to exit that losing position. Where do people want to get out when they take a big loser? Just think of yourself, all right? When you take a big loser and you're still in it and it comes back close enough to give you a break even, you're desperately trying to scratch it, telling guys you'll never do it again. That's why if you find an area where you collected and stuck enough longs, it's going to be great subsequent resistance. After you buy it, you're a seller. Just remember that line. And so it indeed comes back up in here and works as great resistance for another move down and back lower. Not hindsight's 2020 in real time to analyze and accurately read a chart, incorporating two things: order flow and market relationships. If you're learning other things that don't include those two, you're learning the wrong stuff. Period. End of story. And if you disagree with me, the next time you go buy a car, bring a Fibonacci chart in there and negotiate with him, or a profile, or tell him value area high was taken out. And that's where it should go to value area low. See what he says. I'd like to film one of those. That would be funny. Just so people know that our subscribers to YouTube, also notify yourself, because these videos go up daily during the week. But if you're not notified, I don't think it pops up.